Hello traders and welcome to another video review. Today is Thursday, December 22nd, 2022. Let's take a look what do we have in the Forex calendar today. So, basically the most important data are on the screen right now, and as you can see, GDP from the UK is one of the most important data. The other one is a 1 week repo rate and overnight borrowing rate data from Turkey, scheduled for release at noon, and then at 2:30 the data from the US in form of the GDP and of course the initial jobless claims. The GDP in the US for the third quarter is expected to stay at the same level of 2.9%, and the initial jobless claims are expected to increase from 211,000 to 222,000. So what is going on here? Pretty much, a nice day. Some important data are scheduled for release. If we take a look at the medium importance data, as you can see, there's much more of them, like a current account, like a business investment, and plenty of more and more of the interest rate decision, like this one from Indonesia, for example, right? So we will concentrate only on the very important events today, and we will definitely take a look on the British pound technical picture right now. For our chart of the British pound is showing us another weakness in this pair. We got this recent high located at 1.2440. As you can see here, a kind of a double top might have been done here. So this is the current technical resistance. Here you can say swing high technical resistance. This is it. A little bit lower we got the technical support. As you can see, I've marked them plenty of times recently at this level, 1.2107. Nonetheless, it was violated here, and even yesterday afternoon the low was made at 1.20.54. Let me just point it out for you guys. There you go. This is the intraday technical support. It will stay yellow. The next target for bears is located at the level of 1.1899. This is the technical support, so this is the next target. And in case you are wondering where is the technical resistance in this pair, you can say that this technical resistance, as you can see, might be located here. It's been tested plenty of times. Someday this level might be even much more dynamically violated. Nonetheless, it's very, very close right now to the 100 periods moving average, located just at the level of 1.2206. So pretty important level that is. 100 days moving average technical resistance. Bulls will need a lot of momentum to break above this level, and as you can see, the momentum is still negative. Let me put the horizontal line on the level of 50 so you can see clearly what is going on here. There you go. The level of 50 is the neutral level that separates the positive sentiment above the 50 from the negative sentiment below the level of 50, which as you can see has been violated very, very strongly just recently. Right now we are still below this level, the level of 50. Of course, the current RSI is 44, so not that strong, not that weak, basically still below the level of 50, which means that the bears are in control of the market, so it won't be that easy to rally higher here on the RSI. Maybe a breakout above 1.2206, 100 days moving average, and for our technical resistance will trigger some sort of the bigger move to the upside. Nonetheless, please notice the fact that if we come around this level and the bulls will keep testing this level, the momentum will hover around the level of 50, and then it might, of course, reverse. So let's see what this market will perform later on. Let's take a look at the GDP to the Japanese yen. This is a 4-hour chart of this market, but we will switch to daily. we will switch to daily because there's something interesting going on here. As you can see, I got my Bollinger Bands, they are here. We can remove them. We got 100 days moving average. Right now we broke below 100 days moving average. This is the nice breakout to the downside. So what do we have here? Let me just figure it out for you. We got the swing high located at 172.09. This is the high from let me just point it out here. This is the high from the end of the October. Correction, horizontal trend, and then extension to the downside. The local technical resistance then is located at this low from the 11th of the November. This is the technical resistance, 163.04. Where we are heading, it looks like we want to test this low, the low from the end of the September 2022, located at 148.87. So let's zoom in what is going on here to be much more clear about the current situation. Well, it looks like the bears are in charge of this market right now. The momentum remains very, very weak. It hits the extremely oversold market conditions on the 4-hour chart, and nonetheless we are still trading below this short-term trend line. I don't know if this short-term trend line will be much more of help. Nevertheless, let me just copy and make a channel. There you go, it's very nice. Okay, so we got like this channel here, and the market is trying to break below this channel, right? It tested it. Right now it's testing it from it broke below it. Now it's bounced back, and now testing it from below. So there is another technical support located here. So let me just mark it for you. There you go. This is some sort of this technical support as well, 160.01. So this technical, no, sorry, 159.72. Sorry, that's the correct technical resistance. Right now the market is above this level, so maybe we will switch it temporarily to the support, and this level is the support as well, so it's green. All right, so the situation is clear. Bears are making pressure on this market. Bears are trying to move this market way lower. So far, very nice extension to the downside. If we can label it in terms of the Elliott wave, we can use the ABC correction, which is from the top. We got ABC to the downside, now ABC to the upside correction, and now we are waiting for the wave C to be completed. So very nice corrective cycle to the downside. We got wave 1, wave 2, wave 3, wave 4, wave 5. This doesn't look like a typical impulsive wave because it might be ending diagonal, because wave 1 overlaps wave 4 overlaps wave 1. Nonetheless, this definitely looks very corrective. So please keep an eye especially on this behavior of the market here around 157.72, 159.72. all right, so that's the British pound. And let me just take a look you guys at S&P 500. What is S&P 500 doing? So what do we have here is very interesting pin bar here and doji pin bar here. So let me just place the technical resistance line here. That's the technical resistance, 4,154, so that's fine. Where is the support then? Of course, it's here. The lows of the October 2022. Why this one is so high? I don't want it so high. I want it here. There you go. 3,490. We got a short-term trend line building up here. So the short-term trend line is around that level, and as you can see, it was violated but quickly reversed. The market quickly reversed lower, and now we are trading below this line. We are trading below 100 days moving average as well. We've been hovering above this moving average for quite some time, but recently, after this pin bar was done, let me just zoom in. After this pin bar was done, there is the confirmation extension, and we went here. So where is the next technical support in plain language? There is the technical support, 3697. I might locate one more technical support, 3631, but that's it. How much did we retrace? Let me just take a look. How much did we retrace? Where is the retracement? There you go. So how much did we, oh, there you go, how much did we retrace? It looks like, let me just put it to the, there you go, here and here. So it looks like we retrace 50%. 50% is located at 3,816, and this is where we are now. This is where we are trading right now. Okay, 50%. So not too bad. There's a chance for a bounce. Nonetheless, please notice the momentum is negative, which supports the short-term bearish outlook for the S&P 500 as well. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.